Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I think I interviewed him back in February or March. I want to get his insights about 5 or 6 months later. He is a hedge fund manager at Praetorian Capital. He has Kuppy's event-driven management newsletter, and his algorithm tracks event-driven management for trades. And he also blogs at Adventures in Capitalism. He has some great blog articles, and we'll talk about those during this interview. Here's Kupperman, aka Kuppy. Thank you for joining me again.
Hey, thanks for having me on. Appreciate it.
So Kuppy, since you do this for a living, you're a professional risk manager, long and short on your hedge fund. What do you think are the biggest risks to the global economy right now?
Well, the biggest risk, obviously, is a supernova in the energy market. What just happened in Europe should have been a wake-up call for everyone. And instead, they think the solution is more ESG and more solar and more wind. And those clearly aren't the solution. The solution is to rapidly go and expand the carbon economy because they shut it all down. And while there may be a green economy in the future, you need a carbon economy to bridge yourself there. You need a nuclear economy, which probably should be the backbone of any green economy. And they need to turn these plants on and get going. They need to start drilling like madmen. They need to build pipelines, and they need to basically grow the energy supply of the world, because the world's energy demand grows every year and the supply hasn't been growing. And you're going to see a giant epic mismatch. We just saw this in Europe. And I think it comes to America sometime next year.
Now, France has talked about restarting their nuclear power plants, but they have big problems, and they were considered one of the world leaders in nuclear power. But speaking with people in France, Kuppy, they tell me that a lot of these nuclear power plants have had enormous problems for years and have been running at losses. So why do you think the European Union is so anti-nuclear?
Well, I don't really understand why the European Union's anti-nuclear. If they came up with this new technology that produces very low cost, very reliable, clean energy that has no carbon footprint, if you're into that sort of thing, I think we'd all be doing cartwheels, and we'd call it the greatest invention ever. And you'd have trillions of dollars of government stimulus and subsidies to go build out nuclear power plants. Instead, for whatever reason, there's this whole propaganda pushed against nuclear because it works too well. And, when you look at all the grifters that exist in the whole ESG environment, they want to make money through fraud and corruption and all the other things they like doing. And nuclear just doesn't play into that ethos, really, because it works too well. And if you look at what's happening in Europe, these power plants, they haven't gotten the sort of subsidies that solar and wind have. And so if you're trying to compete against someone who has a bunch of subsidies, of course, it's hard to compete. These are also older plants. They haven't been upgraded. The technology is, I don't want to say obsolete, but legacy. And there's new technology, and they should have built a whole new generation of plants. But that's neither here nor there. It's just hard to compete against something that's subsidied. But right now, given where energy prices are, those nuclear plants would be very, very profitable if they're just kind of let loose and told to produce electricity.
Well, the problem is it takes so many years. If they were to start building nuclear power plants, it would take years from now. So it's not like these things can be cranked out like a small nuclear reactor, like a liquid fluoride multisalt thorium reactor. The plans for those where they can make small ones for $80 million and they can have them built in 3, 4, 5 years. The larger nuclear power plants we have now, the legacy ones, in the United States, they take 15, 20 years with permitting, construction. There's delays. So it takes a very, very long time.
But in China, it takes like 3, 4 years. I don't see why we can't build these faster. But the first step when you have a crisis is to say, yes, we have a crisis. Step 2 is to stop shutting down your nuclear power plants. Germany is still fixated on shutting down nuclear power plants. I think they just want to be a feudal vassal of Russia, which is fine. They can go learn Russian. It's not really my problem. But for the rest of Europe, I sort of have hope for Europe, but they have to get their head out of the sand.
There's also, with nuclear power plants, these large nuclear power plants, because of nuclear wastewater and the nuclear fuel rods. And then people see Fukushima, it's still fresh in a lot of people's memories. You have not in my backyard syndrome. So a lot of people are saying, okay, nuclear power sounds good, just I don't want it within 100 or 200 miles of where I live.
Yeah, I understand there's a lot of that. I tend to think nuclear power is really safe. If they built one in my backyard, it wouldn't bother me one bit. I mean, but that's because I've actually done the research and I understand what it is. And I'm not swayed by propaganda. You have to understand the guys who want solar and they want wind. I mean, they're aggressively attacking the thing that's cheaper and more efficient. And they're really good at lobbying. That's how I got all the subsidies. And so if they're good at lobbying, why not, take out the competition? It's just politics. It has nothing to do with logic.
Oh, yeah, I totally agree. Right now with energy policy, politics is trumping economics.
Right. Which, for someone like me that has a mandate to make my clients money, it's like a golden era of profitability because you have ideological constraints and ideological stupidity that's driving a lot of short-term decision making. But I have, I guess, sense of history and a sense of where things are going, just because, I don't think Europe wants to freeze and starve to death, and they probably don't want to be, a Russian vassal. And so as a result, they're going to be forced into nuclear, whether or not they want it. They're going to be forced to turn on their coal power plants, and they're going to be forced to do a lot of things they don't want to do. But, it's just the nature of physics. And you can't run an advanced economy on windmills because it's just not windy sometimes. And you need base load. And, I think the fact that I can see these things very clearly, whereas the vast majority of policymakers still don't see them, is the reason why my fund keeps producing great returns for my clients.
Yeah, I agree. And I also don't think that the global economy, a developed economy, a modern economy, can have cheap electricity without nuclear power and without natural gas. There's just no viable options for baseload electricity generation right now besides those two.
Well, coal is probably the cheapest of all of them. I think that's actually the future. I mean, when you look at some of the newest technologies on the coal side, you produce some of the cheapest electricity just because your energy usage per unit of energy that goes in is so high. I mean, your burn. I'm using the wrong terminology. I'm sorry. I'm not a coal power plant operator, but the new generation of these plants, not only per unit of carbon emitted versus kilowatt hours produced. I mean, it's actually a lot better and more efficient than nat gas, and it's much cheaper too. And I think the direction things go is if you want to do carbon capture, I mean, if carbon is a thing for you, it's very efficient as well. I do think that if we were to stop at the ideology and just support science, you'd end up with, and you told scientists, these are the end goals. We want cheap electricity. We want it to be clean. And we want to have carbon capture. I think you'd actually end up with coal, probably, instead of nat gas. But you'd probably end up with nuclear, and we wouldn't be debating coal or nat gas.
Well, I don't think China's building those advanced coal-fired power plants. I think they're building the cheap ones that pollute because they're just having enormous problems with their air, water, and soil. And I think a lot of the toxins, the poisons are coming from the coal that they're burning.
No. Actually, what's actually really interesting is that China has these pollution mandates, and they have these targets, both for carbon and for pollution. And oddly, building coal power plants is actually cleaner than whatever else they're doing. And they're actually going to expand the number of coal power plants and the amount of electricity generated by coal power plants. And they're going to shut a lot of the older plants. And the net result is actually that it's going to be a much cleaner per unit of electricity produced, and much cleaner just on a yearly basis, even though they produce a lot more power, which is odd when you think about it, because you never actually expect China to do the right thing when it comes to the environment. But it does seem that they're actually doing something better, I guess. Maybe not the right thing, but something better.
Well, we'll see, because I don't know if I trust any of that data coming from the Chinese Communist Party, where they claim that, because they've been claiming that they're going to do green energy policy, but it's all been smoke and mirrors. So they've been advertising, we're going to be.
Oh no, that's all smoke and mirrors. I'm just saying that the new coal power plants they're building are actually genuinely efficient, and I think. I don't know if if the Chinese actually care about the environment. I assume they're totally indifferent. But just the fact that coal costs money, so if you burn it more thoroughly and then capture more of the heat that's emitted, you just have better economics. And economics drives everything, not ideology in the end. And it just seems that the economics are better for this, higher quality or advanced, whatever you want to call it, coal plants that the Chinese are building. Plus, they're a lot larger and much more efficient. And so a byproduct is that it's better for the environment. But I'm not sure if that was actually a goal or just an accident.
And there is a coal shortage in China, right? They've been scrambling to try to get coal imports, but they did ban coal imports for years, starting, I think, in 2020 with Australia. So the Australian coal producers actually had to find alternatives to ship their coal to because China wasn't buying it for a while.
Right. I mean, there's been a lot of switching, and the net result is just inefficiency in trade routes and volatility in economics. And once again, for guys like me that focus on volatility, that focus on inflection investing, that focus on watching the politicians and then taking the other side of their mistakes, this is really the golden era. 2010 to basically 2020 was this decade-long period where all the central banks, all the politicians globally said, hey, we just have this giant crisis. Let's do nothing at all to rock the boat. And let's just preserve what we have and try to rehabilitate our economies. And, the US probably came out of this the best, maybe China too, whereas Europe really never came out of it. But everyone just said, let's not rock the boat. And so for guys like me, I had good years, whatever, I'm not going to cry, but it was a lot harder. There was a lot less volatility, a lot less macro trend. The market just kind of went up 1% a month every month with no volatility and no trend. Now it's just this golden era because everyone's turning on everyone. Every country has a gripe with some other country. Trade routes are being redrawn. The laws of economics are being redrawn. The laws of energy are being redrawn. It's just this crazy time where a lot of things that we've always held to be true or maybe not so true anymore. And the rules of the game keep changing. And if you can see ahead a couple of weeks, there's a lot of money. If you think you can see ahead a year or two, fortunes are going to be made.
You and Chris McIntosh have been talking about this for the last couple of weeks, that you think that there's great opportunities because of bad government policy and government stupidity, that it's opening up the door for enormous investment opportunities, particularly in energy.
Yeah, look, I've been investing for over 20 years. 20 years ago, I used to buy little tiny companies that no one had ever heard of. They tended to be small. That's why the opportunity existed. And they tended to be like consumer product sort of companies. They were growing really fast, 20 or 30% a year. And I was buying them at three, 4, 5 times earnings. And they'd hit a certain scale. And eventually they'd join the Russell 2000, or Procter and Gamble would buy them from me. And it was hard not to make money. I just kept making a lot of money, because when you buy something that's at 3 to 4 times earnings, that's growing really fast, and the founders own half of it, good things usually happen. It's just it's like the secret to making money. And I guess there's too many guys like me in the industry now, and those opportunities don't exist anymore. And companies that are growing really fast, they trade at 20 times revenue. Not earnings, but revenue. And that's probably down from 50 times revenue last year. And so that's not where the opportunities are anymore. The opportunities are watching politicians make mistakes and then just taking the other side of their mistakes. Every time a politician does something really, really stupid, my friends and I sit around having beers and say, what's going to happen 1 year, 3 years, 5 years out from this policy mistake that was just made? And policy mistakes are easy to see. Anytime you use ideology over economics, you're going to make a mistake. And so when governments around the world started making it very difficult to extract natural resources, particularly energy, and banks made it difficult to borrow money in a capital-intensive industry, it just became obvious that if your cost of capital goes up and governments play whack-a-mole and make it impossible to get your permits and build pipelines and everything else, well, then the price of energy is going to go higher. It's one of the most obvious things. For 5 years, I've been telling friends of mine this is going to happen. And because it didn't happen, everyone just thought I was crazy. And maybe I am crazy, I don't know. But now it's happening. And it has nothing to do with Russia. Russian energy production is actually up. It's just not going to Europe, it's going to India. But, in the end, if you produce less than the demand, and the demand grows every year because there's 7 billion people on this earth, and they want the same per capita energy consumption that I have. And, I've been to a lot of these countries. They don't have air conditioning. They don't even have refrigerators. And, they definitely don't have SUVs. And, They want all that stuff, and they're really, really working hard, whereas Americans don't work as hard. And I tend to think that over time, they're going to get all the toys that I have. And, there isn't enough energy production to even have a fraction of these people have my standard of living. And so as a result, energy demand grows every year, no matter what. You have recessions, depressions, it just keeps growing. And so as a result, you need the supply to keep growing, and it's not growing. And then, the way you solve that, or resolve that, I guess, is that the price of the commodity has to go up to either reduce demand or incentivize new supply. And we're in this weird world where as the price goes up, there's zero increase in supply function, because every time you want to go drill, like if someone's telling you that there's going to be price caps, someone's telling you there's going to be excess profits, someone's telling you that they might get your asset expropriated, or you can't, export it from the U.S., or you can't get your permits for drilling, or you can't get a pipeline, whatever it is. Like, if you make it too hard to run the business, no one's going to run the business. They're just going to pay themselves dividends, and they're going to go to the beach because that's fun. And that's what you've basically seen happen in the energy industry. There's been no increase on the supply side. And then on the demand side, it's counterintuitive. Normally, when the price goes up, people use less of it, but they're giving out energy stimmies all over. I mean, if you want to fix energy, you stop giving stimmies, and people, they turn off their lights when they're not using it, and they turn the thermostat down a little. Instead, the UK told everyone, "Don't worry about your electricity bill, we got it." And then the British pound collapsed, and you see this in Europe where they're just telling people, "Please conserve energy," but no one is, because they're giving subsidies. So why would you? And you see it in the US where California gave everyone money. It's an inflation, adjustment stimulus, whatever. And so the net result is that no one uses less. They actually use more because there's no consequences. And so the whole supply demand, function's been turned on its head. And that's why we're about to have an energy crisis, because, if you don't produce more of it and you incentivize people to use more of it, the price goes insane. And that's what's happening.
The mainstream financial media and a lot of people who are short energy, short commodities, they just keep repeating the phrase demand destruction. Have you actually seen any evidence of demand destruction for electricity, for diesel, for gasoline, jet fuel, natural gas? Have you seen large scale evidence of demand destruction yet?
I mean, it's hard to say because, and you gave me a bunch of categories. But let's take, jet fuel. It's below 2019 levels, but is the demand for jet fuel, which is really a function of the number of flights and the number of, passengers that travel, is that because there's not enough demand, or because the airlines cut back the number of flights because they can't get pilots? When it comes to diesel, there's shortages everywhere. I mean, is the demand down, or you can't procure diesel? Gasoline, the government says that demand is down below 2020. I remember 2020, you could play a game of football in the middle of the highway. No one was there. Like, you're telling me demand is below 2020 levels? Like, I just don't buy it. I mean, I remember how empty the roads were in 2020. And I just think there's bad data all around. I don't see any demand destruction yet. I mean, look, I'm a hedge fund manager. I've been very successful. Gasoline is $4 a gallon. If it went to $6 a gallon, I'm not going to use any less. I mean, if it went to $10, it doesn't change my life. And for the vast majority of people, it just doesn't change their life, because you have to get to work somehow. And, you want to go see your friend. In the end, I mean, think about it. Your average car gets 30 miles a gallon, and a gallon costs $4. You're talking 15 cents, 13 cents a mile to get you, your wife, and all your toys. It's somewhere else. It's really cheap still compared to all the other things you could spend 13 cents on. And so, no, I don't think it's been demand destruction at all.
Yeah, I haven't really seen a lot of evidence. Even in 2021, during the pandemic, global electricity demand grew, I think, 6%. I think it was a record amount. So yeah, electricity prices in a lot of other countries are up enormously, but I don't see enormous wide-scale cutback demand destruction. And especially a lot of these people that are short energy, they're predicting a total collapse in demand. They're predicting prices collapsing.
We have seen some industrial demand fall off in Europe, but that's all just come to America. I mean, America wins, and Germany's going to be a vassal state of Russia. But net, I mean, the demand for industrial energy is roughly the same. I haven't seen it fall off really. I mean, and whatever has fallen off in the West, I mean, it just keeps growing overseas. I mean, look at imports of energy into India. I mean, India is having a currency crisis right now because Powell took rates high, and it's detonating all the poor countries. But look at energy imports into India. I mean, it's a perfect example of a country that really imports almost all of their energy, and they should be suffering because the rupee is down a bunch. And here we are, and imports of energy are up year over year, and up, I think, accelerating actually. And the Indian economy isn't doing that great. And it's just something I learned, living in Mongolia for a decade. During the time I was there, the Mongolian tugger, the currency, had declined 75, 80%. And, the IMF had to bail it out, and the government went bankrupt. And it was a decade-long economic crisis. I mean, they're still having an economic crisis. I mean, it's always an economic crisis. And during all that time, everyone who worked in my office, we don't even pay that well. We pay market rates, but people eventually saved up enough money to get a Prius. And once you have a Prius, I mean, you basically fill it up like once a year. And like, no one would ever not fill up their car. They might fill it up, $5 at a time. But once you have a Prius, you're not going to take the bus to work. I mean, it's a Maslow sort of self-actualization thing. Like, if you start taking the bus, like it means you failed as a young professional. Like, how could you possibly be on the bus with all the old people? And so, no, I think once you get yourself a Prius, or in the case of India, you get yourself a motorbike or whatever it is you get yourself, you don't go back. And so, I just think the demand will go up. And what I saw in Mongolia is that for a decade straight, the demand for petroleum went up every single year. It never had a down year, despite the economy losing 2/3 of the GDP in dollar terms, and the currency losing like 75, 80%. And everything that possibly went wrong in that economy. But petroleum demand went up every year. And,
that's where all the growth is.
That's the same everywhere.
The growth in these emerging markets is where all the energy and electricity and the fuels growth is. And it's not from big SUVs, like you said. It's from motorcycles and scooters. It's from cheaper, more efficient vehicles that people are using because they don't want to walk everywhere. They don't want to necessarily take public transportation, and they don't want to ride a regular bicycle like in China 20, 30,
right.
40 years ago.
Well, it's a self-actualization thing. I mean, your parents rode that, and you're better than your parents. I mean, in America, everyone goes backwards, and Gen Z and millennials are the first generation that's worse off than their parents. But in these frontier markets, everyone wants to be better than their parents. Still, they have motivation and drive, and you get yourself a moped, and I think it's 50 miles a gallon. And so, how far do you go to work? A couple miles on the way back. You fill it up like once a month. Does it cost you $4 or cost you, $8? Like, who cares? You're not taking the bus. You're not walking. You're not taking a bicycle. So, I mean, in the end, once the scooter gets landed in that country, like, you have a forever source of demand there.
Oh, yeah. Go to Vietnam or some of these other emerging markets and look at the amount of motorcycles and scooters in the road. It's insane. I've seen videos of it.
Right. And then the next step up is people save a bit more money and they all get Priuses, and they all do the next step. And eventually, they end up being fat, lazy Americans driving pickups. But
not unless gasoline's like $2 or $3 like in Texas.
I got an SUV. I'll still go drive it. I mean, I'm just saying, I think demand is going to keep going up. It goes up every year. And I think actually the rate of growth is going to accelerate, because it used to be the developed markets where all the growth was. And we're in the S curve on India. That's 1 billion people. We're in the S curve on Africa. Like, once you get above about 3,000 per capita income, the energy consumption per capita of that for every incremental $1,000 of income is dramatically higher. And that's why it's an S curve. And, all these places, Indonesia, I mean, they're all hitting, these are big, populous regions that are hitting this S curve when they get to the steep spot. And I just think it's going to stay on the steep part of the curve. And that's why energy demand is literally just unstoppable, even though, Powell tried to stop it.
And Indonesia used to be a member of OPEC, and they used to be a large net exporter of oil. And now I don't think that's the case because their domestic consumption of oil has grown so much.
Right. And I think you're going to see this in a lot of these sort of countries. I mean, look at Saudi. You know, they subsidize gasoline, they subsidize electricity. Like I have Saudi friends who literally it's 120 degrees outside. They turn the air conditioner on and then they keep the door open because they like the view. Like it doesn't matter. It's so
They
cheap.
wait, yeah.
No, they're on the ocean. They like the view. Whatever. Who cares? You turn your air conditioners on. You open your windows. Like you open your big doors. Whatever. And you know, I just think that these sort of nations are going to have huge growth of energy. I mean, Saudi Arabia has a lot of people in it. Like, I just think you're going to continue to see energy growth. And I don't know where the supply comes from. Like, there's literally no supply growth. And what supply growth you see is really just offsetting declines in other places.
Yeah, I agree. Mexico also is another one. They used to be a large net exporter of oil, and now because of domestic consumption, problems in their oil fields, Pemex is not efficient at investing in CapEx and growing their oil production, maintaining reserves. Now you have Mexico, they're no longer a net exporter of oil.
A lot of these countries, I mean, Nigeria is another great example. And, you know, in the end, I mean, it should go, like if the energy comes from your country, it should go to your people. It shouldn't be just exported so a couple guys get it. And no, I just really think that there's going to be a lot of demand. The demand growth is going to accelerate. And these guys that are short energy because, you know, they remember 2008 and the GFC, and they took the total wrong, answer from that. You know, in the GFC, oil peaked out in 08 and collapsed in 09. And I think people forget that there had been, in that decade, hundreds of billions of incremental CapEx all over the place. So this glut of energy came online right when the global economy had this funny hiccup, and demand, I don't want to say it collapsed, but it dropped a bit at the same time that a bunch of hedge funds and speculators and energy traders all got margin calls, and so they dumped all the futures and the price collapsed. I mean, I think what's indicative is that a year later, the price had recovered, 2/3. And I mean, I think that tells you a lot about the supply demand imbalance versus, your energy traders having a margin call. And even in 2009, energy demand was down like 2%. Like, and that's a great financial crisis. And for the year, it was down like 2%. And so if the greatest financial crisis in 50 years does that, I mean, what does a garden variety recession do? I mean, demand grows. And where does the supply come from? I mean, the SPR is almost drained. There's no more supply.
Also, to add to your point, 15 years ago, OPEC had a lot more production capacity. They could bring on a lot more supply. Now we're seeing with this OPEC data in August, I mean, the OPEC plus production on its own without additional OPEC production cut announcements, it collapsed.
Right. I mean, I think when you look at OPEC, you only have a couple countries that matter there. The rest of them are kind of like fringe. And I think Saudi was overproducing. They were overproducing just to prove they could produce. If anything, they were probably draining inventories, and we'll see that later. So they had to pull back. They had no choice. Russia really maxed out production early on in the war because they needed the cash. But when you max out fields, eventually they decline. And without the Western firms there managing their oil fields, I think you're going to see a lot of them really collapse. Like Russia might be down 1 million next year. And so, between Saudi and Russia, they kind of had to cut because otherwise, they'd underproduce, and then you can't threaten that you have excess capacity when you don't. And so, no, there's no excess capacity anywhere. And this 2 million cut, which is really about a 1 million functional cut, that's like what the world has for spare capacity. And if demand grows 1 or 2, like it does every year, well, that'll be done sometime next summer. And then we have a supernova. When you add it all up, energy markets are roughly balanced right now. That's because you got about 1.5 million of global SPR release. You have China, which is locked down, and there's about 2 million, energy demand that's sort of been reduced because of the lockdowns. It's not just domestic, but it's like all of Southeast Asia trade. So you have 2 million there, so 3.5. You have Russia that's off by 1 million, easy. That's 4.5. And I don't know where any supply comes from. Like, literally, I don't know where any supply comes from. And, I think there's a good chance the demand grows another mil or maybe 2. And even if there's a bit of supply, you're probably somewhere in this like 5, 6 deficit range. And that's, the best case scenario. And as we've learned in the energy industry, when you have volatile countries, shit happens. And, Libya's on, it's off. Iraq's on, it's off. Like, you could easily have one of these countries go off for a bit, and 4 to 5 becomes like 5 to 8, and you don't have as much buffer because inventory has already been drawing down. And I think we're at the point where you end up with some sort of supernova sort of event. And especially as countries that don't want to be part of this like East versus West war, they top up their own reserves. I mean, if I was the political leader of a non-aligned country, I'd top up my reserves right now because I think bad stuff's about to happen. And so I think you're going to see some of that too, which is just going to add to the demand side. So no, I think next year is the year of the energy. Energy has a supernova, and nothing else really matters. I mean, everyone's fixated on like AMD head earnings and what's the Federal Reserve going to do. I mean, the Federal Reserve, who cares what they're going to do? The only thing that matters is energy.
Do you think that next year the Strategic Petroleum Reserve that they're going to start buying back the oil?
Fuck no. Like there's zero chance. Like less than zero chance. If they had to buy back the oil, they probably wouldn't be able to do it profitably, which would be just embarrassing and shameful. 2, they're going to keep dumping it until it hits zero or, effective zero. They'll leave some oil there because the military will force them. But no, they'll never buy back. And when you have this buffer, what it allowed you to do was to go to OPEC and say, sure, you guys want to cut? Well, whatever. We're going to dump some oil and, nothing's going to happen. You have something you push back with. When you hit empty, I mean, OPEC just bullies the price of oil around. There's nothing you can do. I mean, I think Biden's probably the worst president we've ever had for many reasons, like surprising number of reasons. But I mean, giving up energy independence in a country like ours that relies on energy, I mean, we're going to end up looking like Germany in a year, and we're going to get bullied also.
And you have a blog article on your thesis for how oil is going to go a lot higher in the next 12, 18 months on your blog, Adventures in Capitalism. I'll attach a link to it below the video in the information and description section. I want to ask you now about the Fed and what options they have left. Do you think they have no good options left? Because it seems like the more they raise interest rates, the stronger the dollar is going to get, the more they're going to crash asset prices. If they crash home prices, they're going to have to do bailouts. And then we've already seen bailouts in the United Kingdom. Do you think that that's going to spread now like a virus the more the Fed does bad policy?
I don't know, bad policy to raise rates. I mean, rates probably should be a lot higher, just looking at like a Laffer curve sort of thing. But no, I think they're just kind of fucked. I mean, that's like the technical term. No, they have no good options, okay?
Yeah, I agree.
But in the end, the history of democracies is that faced with an economic catastrophe or more inflation, they always choose more inflation. And as a result, I expect to see more inflation, And I think they're going to redefine their metrics. And, they said they wanted 2% inflation. I don't know why. I mean, who wants any inflation? But now they're going to say, 10% is the good number. 20% is a good number. I don't really know. They have no good options.
You put out a blog article a couple weeks ago about quantitative tightening. If the Fed was actually using if the Fed was actually using mark-to-market accounting, they'd have hundreds of billions of dollars in bond losses already. We've seen this with the Bank of England and their pension funds. They have bond losses. Do you think that the Fed is eventually going to be honest with their accounting and announce these bond losses or no?
Well, they don't have to announce them. I mean, the way held to maturity accounting works is that you hold the bonds to maturity, you don't have losses. And It's meant to protect highly levered banks from always basically having to raise more equity capital. Those losses end up showing up through the income statement because the net interest margin gets squeezed because you're financing these losses with short-term funding. And so it shows up in your balance sheet, but you have a long period of time before it hits through your tier 1, tier 2 capital. And so it's designed to give banks time without just giving them a margin call. And I think it's probably good policy, give or take. And so the Federal Reserve, they don't have to report the losses, but if they had a market to market today, they're insolvent and probably like over $1 trillion, maybe $2 trillion insolvent. It's just another cost to the Federal Reserve. To the Treasury. They're going to have to get a bailout of some sort. I guess they can just have negative equity and just print the money and solve the problem. But in the end, everything leads to money printing. Every single thing the government does leads to more deficits, more money printing, and more inflation. And I see Powell, who seems fixated on solving this inflation problem. And I guess I commend him. I make fun of him a lot, but he's probably doing the right thing. And if he takes it to the logical conclusion, he's going to blow up the US and blow up the rest of the world first. And that's probably a good thing, actually. There's been so much excess. If you just reset the financial system, it's going to be shitty for a few years. And then, it's probably better for everyone. I just don't think he will actually go through with it. I just don't think he has the political will and the political cover to blow up all of our allies, because they're going to blow up before us. We can print the dollars they can. And so
I totally agree. Look at what happened in the United Kingdom a couple of weeks ago, and there's rumors that they got a $600 billion bailout. Look at the pension funds in the United Kingdom with their interest rate increases and the value of the pound collapsing against the dollar quickly.
Well, all the pension funds are going to be worthless. I think anyone who actually thinks pension funds will have value is delusional. There's going to be a debt jubilee, and the question is, do we just cancel a pension fund, or do we just print it all and your entire retirement savings buys a beer? And here's your beer. Thanks for your 30 years. I don't know which route they take. I assume they just print a ton of money and give everyone a beer. But no, I think it's past the point of being able to pull it back, and the Powell seems like this, like a Greek tragic figure that seems to be trying to, after having fucked it all up so bad. I guess I'd have more sympathy for him if he didn't print trillions of dollars after even my mom was complaining about inflation. My mom would call me up and, hey, Kuppy, the price of asparagus is up 19 cents this week. And like, Mom, I've never bought an asparagus. I have no idea what asparagus costs. Cauliflower is up, tomatoes. Like, Mom, I don't care. Dad invested in my hedge fund. You can afford it. And when people like my mom notice this and the Fed is oblivious to the inflation, and people like my mom are calling me to complain about it. And she has a lot of things she can call to complain about, but the price of vegetables is the one. They push too far. And his data didn't show the inflation because I don't think they've ever actually gone out in the real economy and lived for a day. And so he blew it all up, and now he's trying to fix it. I guess, fixing your own mistakes is something that should be commended, but he shouldn't have printed all those trillions of dollars in the first place. And so he's probably not going to fix the problem. He's probably just going to make it all worse. But
the governments and the regulators, the politicians, the bureaucrats still haven't allowed the supply chain to fix itself. They've shut down businesses. They've made supply chain distortions. So as long as there's problems with investment and capex for commodities companies and the supply chain and value chain on the supply side, even the Fed raising interest rates isn't going to fix the economy. The commodities problems are still, actually, I would argue, Kuppy, that if the Fed keeps raising interest rates, the supply problems, there's going to be supply destruction. So we hear all these hedge fund guys talk about demand destruction, mainstream financial media demand destruction. I think supply destruction is coming if the Fed keeps hiking interest rates and emerging markets get all these crazy cross currents from strong dollar, domestic stagflation going out of control, lack of capital available for commodities companies, commodities futures contracts crashing. The emerging markets, the commodities producers are going to get absolutely destroyed.
Yeah, I think there's just going to be a lot of bad stuff happening, and I don't really know how to quantify how it all works. I think there's going to be a lot of suffering, honestly, and no, I don't like to suffer. And so I've set up, my portfolio to benefit from all this anarchy and chaos. And we own companies that will do well when commodity prices go up, and if commodity prices don't grow up, and I got it all wrong, I'm probably still going to do well. I've just basically tried to see the world for what it is and what I think it'll be in a year or two, and position myself for this. And I can't fix the world's problems. I mean, my grandpa, he's been dead for 20 years, but I remember he once told me, we were talking about Israel and Palestine, and I don't know why we're talking about it. And I asked him, Grandpa, what do you think should be done? And he goes, read the Bible. They've been fighting each other for thousands of years. It's unfixable. And I thought that was a wise thing to say, and, some things are just unfixable. And when your debt to GDP goes above 100, it's unfixable. It's just unfixable. The only solution is to rapidly grow your GDP, which, the people running our country hate progress and growth, or you inflate your way out. And they seem to like that plan, but Powell's getting in the way of it. And so I don't think there's a solution right now. You have to have a change in the guard in terms of the people who are coming up with solutions.
So last question, you were warning people over 6 months ago, you're warning people about Credit Suisse or Chagos that the problems were way larger. We're starting to see the problems come out now about Credit Suisse, some of the other European banks. Do you think that a lot of these European banks have similar problems to Credit Suisse? And what about American banks and other banks? Do they have similar problems to Credit Suisse?
Well, I mean, Credit Suisse, the problem is that it's horribly mismanaged and run by fuckwits. They should have raised a lot more capital, after the crisis in 2009. They should have focused on not losing a lot of money. If you don't build up your capital buffers and instead you do idiotic things, you deserve to lose a lot of money. And the share price is down to really idiotic things. Have U.S. banks done idiotic things? Yeah, of course. Is it systemic? I don't really know. I don't think Credit Suisse is systemic, and I'm not sure it's going to fail either. I think they're going to be forced to raise capital, and it'll plod along in some sort of like chaotic, clusterfuckety, dumpster fire way, like it always has.
You think like a reverse stock split? Because Deutsche Bank hasn't failed either. I mean, Deutsche Bank, I lost count how many reverse stock splits and capital raises Deutsche Bank has done over the last since 2009.
Yeah, I'm not very close to these banks, so I don't really know. I mean, partly it's not their fault. If there is no yield curve in your country, what are you supposed to do? Especially given all the regulatory constraints. And I mean, it's just a dumb business when you look at it. I mean, these large banking institutions are forced to do things that are in the gray area to get clients, because everyone fights over the same client. It's a commodity industry. So a client with a questionable background comes and says, I want to do banking. And if you don't take him, someone else will. And so you're forced to do a bunch of gray stuff. And then eventually, a couple of years later, a regulator says you made a mistake, give us billions of dollars. And, you earned like a couple $1 million from the client. And it's just a terrible business. And they take a terrible business, they lever it up a bunch of times. And then they take like the D team and tell them to go proprietary trade. The results are obvious. There's no yield curve. It's pretty obvious. It's a terrible business. And no, I think the important thing is that Credit Suisse isn't big enough to blow up the galaxy. It might sting a little, but I don't think it's going broke either. I think I think all the drama is overblown, but I don't know it well enough to feel strongly about it. And I think a bunch of U.S. banks did really idiotic things too. And when you lend long and borrow short and the yield curve inverts, I mean, it sucks to be a bank. And a bunch of banks probably hedged it poorly and structured their book poorly, and they're probably hemorrhaging money right now. And I don't know what happens. I mean, it's not good for the banking system.
They'll find sucker pension funds to buy equity shares for Credit Suisse at like 10% or 15% discount, and a bunch of pension fund managers will buy the shares. It's a pseudo bailout.
Yeah, something like that'll happen. And then, a couple of years later, they'll do it again. I mean, look, you have to think of Credit Suisse as kind of like the post office. It's horribly mismanaged. It's run by the government. Everyone knows it's mismanaged and run by the government, except for, I wouldn't let postal workers make billion-dollar derivative bets. And actually, some postal workers probably actually have a better feel for the markets than the guys at Credit Suisse. And so the results are obvious.
There's moral hazard because those guys who are making those bets, I mean, they're probably not going to get fired right away. They're going to get to keep their bonuses. Their profits are privatized. The losses are socialized, or there's some type of bailout for a lot of these banks.
Yeah, that's how it usually works.
So last question, I want to ask you about the commodities that are down the most. So base metals, the copper miner ETF is down about 40% in the last 6 months. Gold stocks are absolutely hated. Fertilizer stocks are down substantially. Do you think there's good risk reward opportunities there, or do you think there's a lot more downside for some of these commodities companies and the commodities themselves that are hated the most right now?
So I think it really comes down to each commodity is its own world. I mean, when you look at like 2020 to the peak at the end, in Q1, Q2, 22, the Fed printed a lot of money and it all went up. Like the entire periodic table went up. It really didn't matter which one you choose. Some did better than the others, but they all went up. And now I think supply demand really matters a lot more. You have to be a bit more careful. I'd be really skeptical of the producers. In a highly inflationary world, you often have what I call spread businesses, which always suffer. So, you're making a spread. You know what your commodity price is. All you can get is a global price, but your costs, they're variable. And so, your biggest cost is going to be labor. Your probably second biggest cost, almost on par with labor, is going to be diesel. You're going to have, structural steel and blasting powder and reagents, and depending on what you're producing, all sorts of weird costs, and you have no control over any of these costs. And effectively, you're earning a spread between these two costs, none of which you have any control over. And some mines are higher grade than others, so you have a competitive advantage against the other guys who are producing the same sort of stuff, but you literally have no control over either side of your inputs or your sale price. So it's just terrible business because you're earning a spread that you don't control. And I tend to think that this cycle, the price of oil will go up faster than the price of the commodities they sell. And I would say the same probably for labor as well. And, all the clusterfuckity drama of running a resource extraction business, whether it's political, there's road blockages and all this other stuff that disrupts operations. I think that's all going to be accentuated too, because a cycle of global inflation tends to get the local guys all upset because their standard of living is getting screwed and they can't afford food. You feel for them, but they're also at the same time going to make it harder to run your business because you're getting squeezed on diesel and on labor, plus clusterfuckity, stuff you can't control. And so the net result is I think a lot of these businesses suffer.
Yeah, and the other third cost there is cost of capital, raising interest rates. A lot of these mining companies, their financing is above junk bond penalty rates. So there's not equity available. Debt for a lot of these companies, unless they have a revolving credit facility, they've probably already drawn from it. So there's not capital available. And if there is, it's at sky high penalty rates.
Yes, I forgot to mention that one. That's a very, very important one. It's a amazingly capital intensive business. And when your cost of capital goes up, your returns collapse. And I would say that in a situation like this, you want to own the end commodity because that end commodity is likely going to go up. And it's going to go up because the producers suffer. And so rather than own the producers that are very likely going to suffer, you should own the end commodity that will go up on the backs of the producers suffering, if that makes sense.
Yeah, retail investors, that's tougher though. Hedge fund managers, I know you buy futures contracts, but the retail investor, they should avoid that because of margin.
Well, that's not true. One, I buy futures. I mean, we play a lot of futures, but we treat it 1-to-1. So, if I want to own $1 million of gold, I'm just going to buy $1 million of gold. I'm going to treat it on my balance sheet like $1 million of gold. I'm not going to say, oh, I need, to reserve 100,000 of cash to hold this $1 million of gold. So it's only 100,000 on my balance sheet. No, if I own $1 million of gold, it's $1 million on my balance sheet. And it takes up balance sheet room that could be held by something else. You don't have to lever it up. I mean, what retail does, they lever it up because they're greedy and they end up getting taken out. And that's why most retail guys don't make money at this game. If you're not levered, I mean, it's great. You can go out there and buy call options, which, gives you leverage where you control your risk. There's a bunch of ETFs. Most of the large commodities these days have ETFs. I tell people to look carefully at backwardation versus contango. You can earn the roll yield or you can give it away. But if you're earning the roll yield, I mean, a couple % a month adds up fast. And no, I just think you should own the physical. And anyone who doesn't own a couple Krugerrands is probably not paying attention. I know gold's kind of gone nowhere for a decade and change, but I mean, I still have some Krugerrands in my sock drawer. They're going nowhere either. And I feel good about it.
Yeah, I was just speaking how like a lot of retail people who try to play in commodities futures, they normally buy futures contract on margin. They're greedy, so they don't manage their risk. They don't use options. They don't limit their downside.
Yeah, absolutely. I mean, leverage is your biggest enemy. I mean, there's moments in time where it makes sense to use leverage in a very disciplined way, but I've seen some of the smartest people I know get truly hurt by leverage. I mean, I've been hurt in my career by leverage, and having been burnt, I don't want to get burnt again. I've learned that lesson. I'm going to make new and more creative mistakes, but using too much leverage is not the sort of mistake I want to do a second time.
Well, Kuppy, I really enjoyed our discussion today. I'm going to attach links to your 2 recent articles about the Fed if they actually mark to market their bond losses on U.S. Treasuries with quantitative tightening, which they won't. But there's limits. We're seeing this with the other central banks like Japan, their yen intervention. They can't allow interest rates to rise. They're trying to manipulate their currency with the Bank of England. So the limits are hitting, like you said earlier in the interview, these other countries, these other central banks first. And Kyle Bassa said the U.S. and the Fed are going to be saved for last. It looks like that's going to happen.
Yeah, it seems likely. And then I just have to plug Kedem. It's Kuppy's event-driven monitor. And go to ketm.com and take a free trial if you haven't. We built it really because I wanted the data, and I just can't imagine trading without it. And, if you took a trial a year ago, we've added a lot more macro. I read the first couple of pages, and I just think it's a great thing. You take a free trial, and I just don't think you'll be able to invest intelligently without it. So sorry, I have to do my infomercial. But
oh, that's fine. Great. I'll put a link to it also in the information and description section of the video.
No, thanks. Appreciate it.
Okay, great. Well, we live in very crazy times. The U.S. has really bad stagflation, but compared to a lot of other countries like the European Union, the energy crisis, Japan, China, emerging markets, on a relative basis, things are better in the U.S., even though a lot of companies are going to start firing and dealing with inflation and this energy crisis. Almost every company, Kuppy, over the last couple of quarters, the main theme for their earnings, higher energy costs, higher electricity costs. They're all saying it. Every company, every industry is dealing with this energy crisis.
Yeah, but I mean, oil. I mean, I'm looking at West Texas is 89. I mean, call me back when it's 200. The crisis hasn't started yet.
For diesel, it has. I mean, diesel is the refiner. Biden was talking about banning diesel exports. So there's a global diesel shortage. Diesel is serious.
Well, Biden really knows how to incentivize people to add supply.
I wouldn't be surprised if some of his relatives were long oil futures contracts while he says this. Unfortunately, that's how corruption works here in DC.
Yeah. No, Good for them. I mean, whatever. We'll all make money together.
Well, now there's the new ETF that's coming out that's going to track insider trading from Congress.
I mean, look, Congress has always been corrupt. I mean, people pretend this is a new thing. I mean, in the late 1800s, they were far more corrupt. But I mean, the difference back then is that they hid it. Now it's just like so blatant and visible. They just have no shame. It's really a shame that we have two political parties that both suck, and no one in the country seems to care to do anything about it. Everyone kind of bitches and complains, but no one has a better solution. And I don't see anyone actually trying to do anything about it. So, look, I'm not going to fix America. That's not what I'm here for. I'm here to make a bunch of money for my clients. And chaos, instability, stupidity, volatility, and corruption, those are all our friends. Just watch the politicians and make money off their mistakes. That's all I have to say.
Yeah, I agree. There's a lot of opportunities for investments and trades in crisis with all this volatility and asset prices moving up and down so much. So if you track it and asset prices crash, there's buying opportunities. And then if things get euphoric, then there's the opportunity to sell.
Yep. There's always money in the stock market. It never goes away.